Welcome to Charts Today. My name is David Linton, and today's edition for Wednesday, the 4th of January, comes to you from Luang Prabang in Laos. And we start by looking at the dollar index, just nudging down very slightly, but had a strong day yesterday, and we are in bullish territory on all three time frames. So we have this 105 target, that's 2% upside. Not a lot of thrust targets on the short term. This one that we've just had, this buying move here, will give us another thrust when that column ends, so we should start to see some of those kicking in again. But most of all, we've got these big upside targets, so this certainly on the long-term chart still looking very bullish. Strong year for the dollar. If we take a look at the euro next, we see here that we are just nudging these new lows again. The euro looking really bad, and we've been saying now for some time that we expect a collapse in the euro. All downside targets here. With this will give us another downside target as well. So it's just a matter of time before the euro is making new lows. And expect headlines very soon where the euro is worth less than $1. And we've got targets as low as 60 cents. 60 cents would buy €1. 76 and 89 are the sort of next targets, and 99 quite a lot around this parity level. So just expect to see that the euro will have a bad year in 2017 according to the chart. If we look at the Japanese yen, dollar strength here again, just kicking through. A shortage of clear targets here, so that is one interesting thing. Not a lot of thrust buying going on, but again, strong on pretty well all time frames. The weekly still not quite through. If we take a look at the British pound, recovering a little bit this morning, but we did activate this downside target to 120.07. We've got two targets to 120.07 and one to 117. That's what we call a cluster. When you get two targets pointing to the same place off different selling thrusts, that increases the likelihood. A little bit of respite going on this morning, but chances are sterling over the coming weeks will go lower and be testing this 120 level. If we look at sterling against the euro, just generally strengthening a little bit here over the last few days. Euro now looking a little bit weaker than sterling. Sterling's had its bad year. It looks likely now that euro will have its. And if we look at the Swiss franc, we're just seeing a slight appreciation here in sterling as well. Taking a look at markets, the big story overnight is that the US markets did rebound slightly. We're up about 1% on both the S&P and the Nasdaq. We didn't quite get back above the cloud on the short term. We did activate this upside target at 22.90. That's 1.5% upside, and that would activate that bigger upside target at 24.53. So the S&P 500 is still looking pretty bullish. Certainly bullish long and medium term. Just short term weakness still not quite out of the woods. So we just need to keep an eye on that 60-minute chart just for any changes there. But whilst we're below the cloud, just a little bit of caution, but it does look like we're going back above there pretty soon. If we take a look at the Nasdaq, much the same picture really. We've activated an upside target at 49.79. We did get back above this 4900 level, pretty critical. So that's a line of action that's running through the price, and we did get back above that. So that is good news as well. So the Nasdaq maybe just coming off the lows that we saw in the last few days of the year. Of course, a lot of the talk was about the Dow Jones Index, and with the Dow, we saw this 20,000 level just couldn't be broken at the Christmas period, but we do have this upside target to 2161, not quite activated yet, but all the signs are with the targets that we are going to see some moves there. And just taking a look at the futures are up very slightly this morning. Nasdaq E-mini, just here we do have an upside activated target and just wandering through the cloud again. We only need a flat session or just a little bit of trading and we wander out of the cloud on the E-mini, so that's quite significant too. So just keep an eye on the those short-term charts for what's happening in the US market. Of course, that will dominate a lot of European markets, but the FTSE has actually not turned negative at all through the Santa period. Strong oil prices are a factor, of course. A lot of the weightings in FTSE, Shell and BP have a big impact, and we're seeing we'll see oil in a minute, but at the moment FTSE no clear short-term targets, but quite a lot of medium-term targets, 10% upside, 14% upside there as well. And interestingly, the FTSE is just breaking the 2015 high quite clearly now. The FTSE 250, on the other hand, has still got just a little bit of work to do. We'll have a look at this chart in a second. Just got a little bit of work to do in order to get through there, and we're just are sort of seeing a little bit of resistance. We've held on to the bullish position in the cloud there on the lagging line, and we do have this upside target if we can go and make new highs of 5%. So we are seeing that that market just middle UK stocks just looking pretty strong too. But of course, a lot depends on the US market, and we just need to keep an eye on that. The DAX looking pretty bullish. We broke out at the end of last year, holding on to all those gains. Upside targets of about 1.5% in the very short term. So that's quite key. The big story really is the Nikkei overnight. We had a very big rise in the Japanese market, up over 2%. This market just continuing to power ahead here, and we're seeing that really kicking through in the chart. So really significant that we are just running here now on the Nikkei. Bullish on all time horizons, just activating this new upside target, 42% higher. So Japanese stocks really increasing quite strongly on currency grounds. So that's really quite key. It wasn't quite the case across Asia. This Chinese market was up very slightly. Hang Seng was down very slightly. Still have this long-term bearishness hanging over us, but we are just putting through a recovery in the short term. So that's looking pretty good. Really quite key. Again, most of the Asian markets, bar the Nikkei, didn't move greatly overnight. We're seeing here the Sensex. We're above the cloud now on the short term, 3% upside, so that's pretty significant as well. You might recall from yesterday's recording that the Australian market had a very strong day, day before yesterday, and we see now that we do have still this holding on to those gains. So really got some quite big upside targets here, as much as 2%, 3%, 5%. This is clustering, lots of buying thrust there in the Aussie market, so looking pretty good for the new year. Taking a look at commodities, we mentioned that Brent was looking pretty strong, which would have an impact on the FTSE. We see here that on Brent crude we are just pulling back a little bit below the cloud here, but we have got these long and medium term upside targets, so quite key that we've pulled back a little bit in January, but we are just seeing that improving. So bullish time of year. We've got targets to 72, 76. So we really do expect to see those upside targets being fulfilled. US nat gas just struggling really in these around this 330 level, and we are just bearish below the cloud here. But at the moment, and a shortage of short-term targets, so quite a lot of volatility kicking in there too. Taking a look at precious metals, gold is actually just starting to perform. We remember that we had a pretty bad end to the year for gold, and we did say that the new year will be interesting to see if we can start this sort of run that we saw last year. Does seem like we might be finding some support on the cloud. We are bullish in the short term. We've got an upside target now of 1192. That's 2.6% upside. So we are just starting to see a little bit of recovery creeping in there. So interesting that we now might be just seeing a turning point in gold. So keep an eye on those short-term charts. Much the same is true for silver. Upside targets of about 1.33%. So quite key there. And really, precious metals just kicking off with a good start in the year. If we look at the 10-year Treasury yield, just hovering at this 247 level, we just are bullish on the yield for quite most of the charts, but in the short term we do just have a little bit of bearishness creeping in there. So we just need to be aware that we might just see a little bit more of a downside. Last of all, we look at some of the tech stocks, just as a proxy for what we're seeing in the Nasdaq. And of course, such a big driver now for the market, so really quite key. We look at Apple. Apple had quite a strong recovery towards the end of the play yesterday, and we're really holding on to these long and medium term charts. We're not quite through on the short term. Amazon had a pretty mixed session as well, but in the end closed up 0.5%. So that's after a day before, we'd had 2% downside in trading days around Christmas, so that was really quite key that we did do that. We are still below the cloud here on Amazon, and we still do have some downside targets hanging over us, so a bit of a mixed picture. And Alphabet, which is of course Google, up quite strongly yesterday, nearly 2% upside there. So this chart just looking a little bit better, but still below the cloud, so that's quite key as well. Last of all, one of the other proxies is Facebook, and because this has been testing quite key levels, this 115 level, if we do see a fall off there, that could create a little bit of contagion amongst the tech stocks. So 150 we're just holding at the moment. We had a bit of 1.5% upside yesterday's move, so hopefully we can get back above the cloud and start moving higher again. That's it for today. Until tomorrow, happy charting. See you then.